Everyone, and welcome to Stock Market Today. It's Coram and Ed Carson with a breakdown of the action in today's session, December 1st, where we saw small cap stocks in fuego alongside tumbling Treasury yields.
Yeah, nice broad advance today and for the week. I want to take a look at three stocks that were flashing some buy signals: Arm Holdings, United Rentals, and D.R. Horton.
Okay, we'll get to those stocks, but first let's take a look at the major indexes, kicking things off with a look at the Russell 2000 small cap index, which led today powerfully up 2.9%. We had the Nasdaq up almost 0.6% by the close. Also the S&P up almost 0.6% today, and the Dow, which had a strong day on Thursday, up another 0.8% today. So nice into the week in time where we thought, hey, maybe we could see a little bit of a pullback, a little bit of a pause, but definitely with Fed Chair Powell's comments and beyond that, maybe I guess reading between the lines, Ed, of what he was saying or not saying, making those bets there and seeing Treasury yields fall. So definitely benefiting small cap stocks, but a broad-based rally, as you said.
Yeah, and so the Russell, which had been hitting the 200-day line, really powered higher. So that's nice to see. Obviously nowhere near highs, but definitely a reflection of the breadth. And we're going to look at some other things that will show that kind of breadth today. Yeah, the Fed Chief Powell was saying, "Oh yeah, we're maybe not done with rate hikes," but as you're saying, read between the lines. It's like, sure, Powell, sure. It's like nobody really believed him, and yields kept on falling, and the market took off because I guess he wasn't so strong on that. Other Fed officials have been saying rate cuts. We may get rate cuts as soon as March, and if not March, by May for sure. It seems like so a big transformation there. So this was a big win here this week. It did feel like we were going to have a pullback midway through the week because of the big downside reversal on the Nasdaq, but a lot of that was with some of the big cap names. They didn't have the greatest week, but that's okay. This is almost, to me, it's ideal almost. You have some of these tech titans, which really were sort of going up and up, and how much can these gigantic names go? They needed to take a break, but now we're seeing other things really come on. The fact that the market could rally this week, not just the small caps, but all the indexes rise and really doing well here. That's just a really positive sign for the market.
Yeah, I mean, even with a spot check of some of those mega cap tech stocks that you mentioned, Ed, one could argue that it's not abnormal action. Yes,
No.
yes, they're declining, but it's not abnormal to see after the strength that they've shown to lead this rally all November long.
Yeah, I completely agree. A lot of them look just fine, and just other things are coming along. New sectors are coming along. So this rally keeps on impressing. Honestly, it's been really nice to enjoy this so far this year-end rally.
Yes. So as you mentioned, Wednesday, we did get that downside reversal, but Thursday intraday for the NASDAQ, it looked like we were going to see a continuation to the downside, but closed off lows. And then today reversing higher, and it looks like closing at the highs or close to the highs of the day. So we're finding support at that high from early September, which is great. We're still above 14,000. Maybe we can see the 21-day line catch up a little bit to the action, or maybe see a gentle pullback to that level in this power trend. What do you think, Ed?
Yeah, all that is possible. We're finding support around areas where you'd expect. We're hitting resistance where you might expect, but everything's looking pretty normal.
Okay, and let's also take a look at the S&P 500 here, getting close to 4,600, which also coincides with that high from late July. So the S&P, we could see new highs for the year heading into, well, now it was the first day of the last month of the year today.
Yeah, and it was a 52-week closing high, so it's a
Right.
nice action here. So this one's shrugging off again, which is where all this other sectors, like Nvidia, Google, and Meta had bad weeks, not bad weeks, but down weeks, but this one just coming along. So nice action here, and the Dow is moving along and is at a record, not a record high, but a 52-week high, basically the highest since like January 2022. So really a big shift here. Again, a lot of things, some of the other sectors, the industrials, the financials, there were some medical, a lot of names were doing well here, plus Salesforce, because software was strong. So a lot of things were helping the Dow this week. It's only 30 stocks, but it did feel pretty broad in there.
Yeah, it definitely did. So, seeing some milestones here for a lot of the major indexes, 5 weeks up in a row as well. Something to note, not for the Russell, but for the Dow, S&P, and Nasdaq. So, with that being said, I guess looking ahead to next week, maybe we'll see. So it's like same week after week, we're getting a broken record. Maybe we'll see a pause here. Maybe we'll see a pause here. But that doesn't mean to have a bearish mindset. I think if you are a market timer like IBD is known for being able to do, you were getting that exposure early on in November and tactically adding all month long and even today. And I know a couple of stocks that we'll take a look at, but being tactical about those ads and not predicting a pullback, but being ready for one if it happens.
Yeah, and yeah, in some ways, times being aggressive, by taking advantage early in a rally after a follow through is actually the conservative thing because now you can sort of sit back and say, I don't have to take a lot of action,
Right.
but there were things to be doing today if you wanted to.
Yes. Okay. Next on our list, let's take a look at some measures of market breadth. We will compare QQQ and QQEW. So QQQ, NASDAQ 100 up 0.3% today. QQEW up about 1.1%. So if you take out the heavier weightings of the mega cap techs, it does seem like, I mean, and again, this is the 100 largest, NASDAQ non-financial companies, but seeing broader strength there. We can also look at RSP, which I know the team was pointing out even yesterday looking strong. And if yesterday looked strong, then today looked especially strong, Ed, with RSP, the equal weighted S&P 500 ETF, up 1.5%.
Yeah, so it really shows the underlying strength. You look at the Russell, QQEW, the RSP. It's like, okay, a lot of things were moving here.
And what was the catalyst for that, or one of the big catalysts? The Treasury yields.
Yeah, that's just really amazing how much it's gone down. And one is like first we stopped being certain worried. There's a lot of reasons, but stopped being worried about the Fed. And now the Fed is really signaling, despite what Powell said today, that rate cuts are probably coming sometime next spring. So that is really brought a big tailwind. And even it's like the 2-year yield has fallen even more. I mean, this one, I think the 2-year yield fell something like 39 basis points this week. And that means it's sort of we've had this an inverted yield curve, which isn't great for banks. And one reason why the banks are doing better is because that yield curve is at least getting less inverted because the whole borrow short, lend long doesn't really work too well when the short-term rates are higher than the long-term rates. So it's at
Right.
least better. All those banks that imploded because the long-term yield was inverted. So that's
Mhm.
helpful. And
Yeah.
there's LF having a big week. A lot of the names there. So lower yields, less inverted, very positive for the market in a lot of different sectors.
Okay, well, let's fly through a couple of different sector ETFs here. SMH chips holding firm, now 3 weeks tight-ish, it looks like here,
Mhm.
around highs for the year, down about 0.4% on the week. FNGU, this is triple leverage. There also is FNGS that we can take a look at,
Yeah.
down about 1% on the week, breaking a 4-week win streak, but not all too surprising, as we were saying, to see a little bit of a breather for some of these mega cap techs. FNGS for the month of November up over 13%. So
Yeah, that's a lot for some
budging
really big
lower
names. Yeah.
so far.
Yeah, that is like it doesn't you almost don't you'd almost want it to go down a little bit more because it's such a mild pullback. So yeah, this is nice to see.
Okay. And now let's take a look at IGV software. A big week this week, up 1.3% on Friday. And the weekly chart looks even more impressive, up 4.4% this week, up 5 weeks up in a row. So software continuing to dominate. And I know today we saw a lot of new kind of stocks add to the party with really strong, really impressive earnings reports and reactions that haven't been those leaders that have been running. They've bottomed and maybe have been consolidating, and they're now joining this software party, Ed.
Yeah, there were a lot of them today. There were a lot of them the prior day. There's been a lot of really big software winners today, this week, and the last few weeks, as it's pretty clear here.
Yeah. Enough said there. Okay, now flying through a couple of other ETFs. A big week for the metals and mining group. XME up 5.4%. XLI, which we briefly showed earlier, nice week here, up 2.3%. PAVE, also in this industrial theme, up 2.4%. XHB, we will be taking a look at a builder here soon, but the XHB Home Builders ETF up 3.5% this week. And KBE, we showed KRE, the regional bank ETF. Here's another one up 6.4%. So this does look pretty broad based here, Ed. Let's now take a look at some individual stocks of note. Here's a look at ARM Holdings in that fabulous semiconductor group, along with NVIDIA and AMD, up 3.9% on Friday, clearing an early entry in a handle.
Yeah, and that's right around a closing high. I don't know if it quite got there because it was sort of nudging around that level the last few days. So nice action there. You could have taken a position here today if you wanted to, or you could still do it off the traditional buy point. Uh, it rounded out. It's acted pretty well all in all. It did undercut the IPO price, but it sort of came out just before the market really was selling off. It's hard not to. The RS is, the RS line's at a new high. Pretty strong action here. The strong growth in the latest quarter. This is obviously not just a tiny little company. It's a huge company. It's
Right.
been public before. So it's not one of those where you'd say, wow, this could go up 10,000%. Well, no, but this could do. This is showing some real positive action. I believe this is on our leaderboard watch list. I made that big, powerful move a couple like the prior week, and now is sort of setting up in this environment. So definitely there's some growth stocks that are still showing some positive action.
Absolutely. And seeing that RS line blue dot underscoring that strong outperformance. And we did highlight, I don't know if we also did on this show, but I know definitely on IB Live, we were talking about that early entry alternative pivot within the base. So just what we want to see for now. Anything can happen, of course, but when you get a strong move up, have it tighten up relatively and
Mm-hmm.
then clear that area. So one we're going to be watching, especially as the most recent quarter, some nice results there. Next on our list, let's take a look at URI breaking out of a cup with handle base. This one also had an early entry within the handle as it rebounded off the 21-day line, and now seeing a full-fledged breakout in today's session, accompanied by some strong volume.
Yeah, some strong volume. That was really impressive. So again, industrials, construction, and infrastructure are all doing pretty well. So it's nice to see that tailwind. The 490 area, has been an important area for a while now, even on just a weekly. I mean, I guess 480 was there previously, but you can see there's been a lot of long-term area that it's sort of really clearing out today. Positive to see the RS line not in a new high, not even a 52-week high, but it hit a consolidation high. So it was, even as it was breaking out. So that's positive. Yeah, you might have decided a couple days ago was the better time to do it. It wasn't, the volume wasn't like tremendous right away. Showed strong action there, and the market was showing weak action that day. So like, do I
Right.
really want to go in here when this is? And obviously it worked out. But today this was moving early on and kept on going. So, and the volume really picked up as well. So a lot to like here. It is definitely a strong sector once again.
It is. And let's take a look at DHI in the home builder group, seeing a lot of home builders that look like this with a strong move off lows throughout the first half of November, then went really tight and now moving again, Ed, including DHI, up 2.5% on Friday, presenting an actionable opportunity.
Yeah, it did close just above the buy point, but you could have bought this well earlier in the day when it was breaking that handle. The volume was solid today, and was pretty solid the last few days, especially compared to where the handle was. It's noticeably higher in those last 3 days. So definitely actionable here. As you say, there was a lot of them like this. So there's definitely ones you could go through and pick your poison, and because they do move pretty similarly. But this was really a positive move today. Again, fundamentals, if people are expecting things to get better again, may take a while, but down the road, if with mortgage rates coming down quite a bit over the last several weeks.
Yeah, that can only help
Yeah.
the situation there. Okay, Ed, let's talk about what we should be thinking about for the week ahead and how traders should prepare.
I mean, it's still possible we could get a pullback, though. It seems like maybe the mega caps can take the brunt of that, which wouldn't be the worst thing for them or for the market. So I think investors can still be looking to add exposure if they want. This might be a good opportunity to be looking for areas outside of maybe that AI-led growth space. Not that you couldn't buy things in there, but look at those home builders, look at the industrials. There's a lot of things, financials. So definitely be looking, make casting that wide net so you're not missing them, as they come up. And that way you could balance your portfolio a little bit. And so if growth does take more of a setback,
Mhm.
you've got your portfolios better positioned for that. But a lot of this could still be don't have to do necessarily a whole lot. If you've got good stocks and you and you're pretty well exposed, you don't have to be super active every day. And there's nothing
Right.
wrong. I mean, people often talk about the market, let the money work for you. And often, it's active traders. No, I'll do the work. But it's like, but sometimes it's okay. You do the work and then it's
Right. Yeah. I guess if it's not a hard penny market, easy dollar market. I don't know.
yeah. So you can be making pruning the weeds, like,
Yeah.
maybe stocks that are too extended or lagging, you can take action there, but and
Right.
maybe move into something else. But yeah, it doesn't have to be radical moves at this stage.
Okay. Well, thank you so much, Ed. And thanks everyone for tuning in. We will be back next week with more, starting with IBD Live. And we hope you join us in the morning, 10 minutes before the opening bell, investors.com/IBD Live for all the details on that. We will see you there. And we'll also see you right back here on Monday after the close. Have a great weekend.